With Smartworks Coworking Space IPO opening for subscription today, Sajid joins in with all the details and a SWOT analysis. Sajid.
That's right, Smartworks Coworking Spaces. I think the IPO is opening today at July 10 to July 14. There is price between 387 to 407 rupees per share, and there's a fresh issue of 445 crores and OFS of 137.6 crores. So the total IPO size is 582 crores. Now, at the upper end of the price band, the company is valued at little over 4,600 crores. Now, look at the financials of the company. The top line has been growing on a decent note, but it's been making losses for the last 3 years. The revenue for FY25 stood at 1374 crores, which is up 32% over previous year. EBITDA at 857 crores, which is again up, and good EBITDA margins as well at 62%. But it has been booking losses for the last 3 years, and in FY25 it had a loss of 63 crores. If you look at the use of proceeds of the 445 crores that they are raising, it's going to be used for 114 crores is going to be used to pay some of the debt. The total borrowing of the company is around 400 odd crores, so they're going to pay around 114 crores, and the remaining 225 crores is going to be used for capex for future growth. They are operating 50 centers across 15 cities with a capacity of nearly 2 lakh seats. That contributes, if you look at the top 4 or 5 cities for them, it's basically Pune, Bengaluru, Hyderabad and Mumbai. Together, all these 4 cities are contributing nearly 75% of the total turnover there. And additional centers are being opened in the next 2 years in Pune, Kolkata and Mumbai. What's negative for them? It's been priced at an expensive rate. The preferential allotment in June 2024 was priced at 269 rupees per share, and now the current issue is been priced at the upper band of 407 rupees per share there. So the company also has an expense-centric model as compared to an office which is a little lighter in terms of assets, because they look at more of a revenue share with all the assets or properties they go into, and so that's why there's a the bottom line and there's a lot of expense which comes into the P&L, and that's the reason why they've been making losses there for the last 3 years. As far as the recommendations are concerned, Street is looking, little, muted in terms of this IPO. Basically, they're talking about, the investors who want to get into this space should wait for the listing before they invest in this IPO, because there might not be much of a listing gain that will come in for this IPO. Neeraj.
Thanks, Sajid.